This is the Algo Futures Trader Weekly Market Roundup. And this is the Algo Futures Trader 7 for NinjaTrader 7. This is an automated opening morning breakout strategy. And the basics again, this shaded blue area, that's your no trade zone. What the market or what the system is looking for is for the market to break out either above or below that no trade zone. There's some other factors that go into that, and that's the indicator here at the bottom, which is what we call the traffic light filter. So for a long trade, the traffic light filter has to be all green here. For a short trade to be sent to the software to execute the trade, it has to be, the traffic light filter has to be all red. All right, now there's some other things that we're also going to look for, but let's talk about losses for a second. So on Friday, we had a long setup here. And there's a few other things that we look at before the market opens to determine, to give us a little more edge, if you will. So one of those things we looked at was, this is our alphawebtrader.com. And we check this to, we'll check the gap in the morning. So the gap in the morning was telling us that the Dow, we had an inside gap down, the Dow would want to trade higher to fill that gap. All right, and then our alpha bias here, this section tells us what markets were strongest, right, and which markets were weakest. So the S&P, this I think was at the end of the day on Friday, as the market hasn't opened yet Sunday night here. S&P closed as the weakest market. NASDAQ here was the strongest market. Friday morning, the Dow was at the top. The Dow was the strongest market. It had an inside gap down, which meant that it would want to, at some point, fill that gap. At least a 70% probability it would fill the gap during the day. So we decided we would go long and avoid shorts. Well, no shorts set up in the morning anyway, but this first long trade we got into, this second black line here, this was the first target that the software used. All right, so the software has a predetermined target that will take 2 contracts off if we get to that target. Well, this first black line was the gap fill. So basically the Dow opened and it filled its gap prior to yesterday's 415 close, which we still use, 415 Eastern. All right, and I said at the time in our trading room, which you can join for free through our Discord server, links are below, I said, hey, you may want to take that first 2/3 off here at the gap fill because that may be all we get. And that is all we got. Now, I left the software running and left that target out here, but many people just took that first target on 2, which was a good thing because you can see it never got followed through to that first target. And eventually on the other end here, it ended up stopping out. So the initial stop, so if we entered the trade here, the initial stop obviously would be on the other side of the no trade zone. All right, so those losses, can unfold. They do unfold. All right, but what's going to happen is at some point down the line, and you can see even later that day, well, you had a short trade. If you continue to trade, you had this short trade which played out fairly, a fairly decent trade. And then when price crossed back above the no trade zone here, we had some long trades that fired off. And I think there was, it came in right here, right, which also ended up being a nice trade heading into the close here. So losses can and do unfold, but you can recover them. And even if we didn't have any other trades, let's say this particular day, or you didn't take any more trades this day, there would be a morning where the market opened up, you pick the direction right, and the market runs 100% of its range for the day, and we hit that final target, and that's a trade day that would more than make up for a losing trade like this. So those winners are out there. You just have to keep taking those trades and follow your rules, of course, but they're out there and they allow you to recover those losses. All right, hope that's helpful. We'll see you all again next week.